All right, so if you've been following the stock market lately, I know you've noticed that the memes are back, or they seem to be back. Especially AMC. But I wanted to evaluate these as unbiased as possible. If you've watched my channel, you know I'm a GME holder, and that's my only play in terms of the memes. That being said, with all those old and new memes popping up, I know there's people that want to jump in on some, and I figured I'd give my case for each if I were going to invest. Um, for starters, I think AMC is obviously leading the pack this time around. They're the only meme to pass their January peak right now. So I think all things being equal, I'm going to evaluate this kind of under the assumption that this thing is just getting started and all the other memes are likely going to hit and potentially surpass their January peak. I mean, otherwise, why would you invest in them, right? Then I'll break down some option plays with that in mind. Obviously, that may not be the case. I won't be investing in all of these, and I would encourage you to make your own decision based on what you think is possible. So let's look here. Just to pull up, these are the four, big names from the first run up in January. Starting with Blackberry, as you can see, it hit all the way up to 28. Currently trading at around 11.56, with volume kind of nowhere near where it was on that run up. GameStop hit a high of 483 intraday, and right now it's at about 249. After hours is obviously a little bit different, but we're in that 250, 255 range with a little bit more room to grow, probably about double. AMC, on the other hand, back in January, only got up to 20, and just the other day blew past that. And now sitting at about 36. I think in after hours it was pushing 40. So, like I said, this one's leading the pack. And I'm going to kind of evaluate this based on the thought process that everything else is going to at least get to their old peak. Okay, I'm not saying anything's going to blow past it. I don't even know if they're going to get to the peak. But if you're interested in investing in these, that's why you'd be doing it, right? Because you think it's going to go up. So, Nokia, on the other hand, 979 in January. Right now sitting at about 519. So, GME. Okay, let me pull this up. We got a 90% increase to the high of 480, or a gain of about 230 bucks. With the potential to move higher if it follows the AMC pattern after a 480 break, it really shoots up. And I think all of that could be said for any of them. I don't know that that's necessarily going to happen, but anything's possible. IV right now on GME is about 194%. And with GME, I also want to reiterate that I think shares are the way to go, and this is going to go much higher. This is just my own personal opinion, but from an unbiased standpoint, if we were going to do options, I would definitely want at least another week, probably on all these option plays too, just because it's such a short week. Today's Tuesday. We only have 3 days left. So I think with all of these, I'm going to be looking at least the June 11th dates. So pulling up the GME option chain. Now, keep in mind, like I said, IV's kind of high. It's actually at 230% for June 11th. See here. So if I was going to go here and I actually had the game plan that, this thing was going to run up to 480, I would probably, because of how expensive these things are, come all the way down here and grab a 530 call. Okay, so that's the last strike price on the option chain. It's going for, or was going for $5 today, which is about $500. It might be going for a little bit more tomorrow because GME ran up, I think, about $7 in after hours today, so it's sitting at 256 right now, but we should be somewhere around there, like maybe $5, 550. So anyways, I would probably grab one of those, and the reason being is you're just going to get more bang for your buck. It's the cheapest, and if we hit 480 by, let's say, like the 10th, which is the day after the shareholder meeting, so we go to the June 11th strike date, we still got that shareholder meeting that's coming up next week kind of in play. You'd probably be looking at like a $5,000 gain, maybe even higher as IV jumps. if we get to the 480 mark by June 10th. Okay, and again, we're looking at this as if this is the meme mania. We're looking at each different stock, evaluating it that within the next 2 weeks it's gonna, hit those January highs. If you don't believe that's possible, don't make this play. One more play that I would probably even consider with GameStop is maybe rolling it out a week to June 18th. Um, you know, Same exact strike price. Again, if we're thinking this thing's really going to blow up, you can go with, the 530 for June 18th. Would cost you a little bit more. So we're looking at, somewhere around 800, maybe even 850 tomorrow. But it would likely net you 6K or higher, when the IV kicks in and it gives you an extra week to run. So moving on. I think the next one on here was Blackberry. Pull that one up. Let's see here. With Blackberry, IV's a lot lower, sitting at about 160%. Likely be a little bit higher tomorrow as well, as the stock is actually, it closed here at 11.56 today, and I think it ended up running up to $13.14 in after hours. Our January high was about 28.77 intraday, which means it has roughly about 115% to run from where we are now. Same thing with the short week. I'd like to be on June 11th or June 18th. Volume real quick, looks like we're somewhere in that kind of like 100 million range the last couple of days, which is still a little bit less than early January. Okay, so when things really started to kick off, it looks like we were somewhere in like the 300 to 400 million volume range. So pulling up the options chain on Blackberry. Like I said, I probably will start with this June 11th. At the $20 strike, it's the highest on the option chain, and it still kind of prices us underneath that target of $28 if we think that's where this is really going to go. If I went with that $20 strike, I can get 10 of those for 500. So we're still kind of in that same ballpark range of price that we were talking about paying for GME. And, if it ran up to $28, we'd be looking at a $7,500 profit at expiration. If you're not feeling the $28 price and you think maybe $20 as a price target is more likely, then maybe I'd roll over here to like this $15 strike. It's about 89 bucks a call. Might even be going for $100 tomorrow. So maybe you can grab 5 of those now instead. Pay about $500 at expiration. If it hits 20, you'd only be getting probably about 500 back. If it happened sooner, you would get a little bit more because of the time premium and even the IV going up. Obviously even more if it happened this week. And then if it was to run up to 28, you'd be looking at, let's say probably, I don't know, $1,500. So a little bit less profit, obviously, like I said, if we go with the that higher strike range, getting to the $20 strike, and if you really think this thing's going to blow to $28, there's a lot of profit to be made going with that $20 strike and buying more of them. So next up is NOK and Nokia actually has the lowest IV. It's sitting at about 60%, and about 519 right now, high of 979. To be honest, this is probably the one I'm feeling the least. That's just my opinion. But if you think it has the possibility to get back to 9, that's about an 80% increase in price. Volume wise, we're sitting probably at about 100 million right now, which is roughly actually where it was at, maybe even a little bit more than where it was at right before the run up last time. But when it did run up, we were looking at 270 million, 330 million volume, and then on the day it hit $9, 1.1 billion. So, volume absolutely needs to pick up on this thing. But that actually is kind of crazy that that's where it was at last time. Really low volume, and then it just popped out of nowhere. So let's see, option chain for Nokia, and I'll try to even stay in that kind of $500 total price range to see where we could be at. But and we'll stay with these June 11th strike price. So just looking at this, um, I'd probably even go with the June because it's so cheap. I'd even go with the June 18th if I was into Nokia, just to make sure that I really give myself a little bit more time. Maybe this, you know, takes a little bit longer to get some legs, after other ones start dying out. And, probably this $6 strike at 11 cents. I mean, that's $11 a call. For $500, you could buy 45 of them, which is a lot, compared to the others. Like I said, I'm not feeling Nokia out of all of them. I mean, if you're looking at this and you think that any of these have the possibility to get back to where they were, like AMC did, and maybe even blow past it like AMC, and that's the bet you're making, these are pretty cheap. So, you know, if you were to give 45 of them, if it got to $7, you're probably looking at about a $4,500 profit. If it gets to $8, you're looking at about a $9,000 profit. If it gets to $9, you're looking at about a $13,000 profit. Going with 45 of them. Obviously you can do whatever you want and go with a little less, but I'm trying to stay in that $500 ballpark. Of all the memes, this one seems like the least likely in terms of tracking and how everything's been kind of moving together and the price movement. But it could be a cheap play, even if you just wanted to buy 10 and throw $100 out there, $110. All right, so this last one, the last meme, the one that, like I said, has been leading the pack, AMC. So, as you can see, January high was about $20. Absolutely ripped that off a couple of days ago, and it's just been on an absolute tear. It ended today at about $32, and like I said, $39.41 was the after hours high. I think it closed after hours at $37.69, and honestly, I'm expecting this thing to just keep running. But it's also the hardest to figure out, in terms of how to play this. So it's got the highest IV. It's sitting at 245%, which means you're going to be paying a lot more premium for these options. And that's going to be even higher tomorrow morning as it ran up 20% in after hours. And there's really no basis on where it's going. So I think it has the most retail momentum right now. But it also comes to your own risk tolerance and what you believe. If you're interested in buying AMC options right now, you should at least think it's going to $60. Personally, with the momentum it has and the open interest on the option chain, I could see this thing hitting $80 easily. And I actually think that's probably going to happen this week. But also, I know there's some people out there that believe this is in the early stages of kind of what GME did in January, and it's AMC's turn to make a big run. In that case, maybe your price target that's in your mind is somewhere in like that $480 range, $400 range. Perfectly fine too. So keeping up the same strategy, I'm going to go with the 611 calls. Like I said, I actually believe AMC is probably going to make a run to 80 this week. But I want to kind of stay in this same, give us a little bit more time. So looking at this options chain for AMC, these are pretty pricey, considering, the price of the stock right now. But to stay in that $500 price range, and if you're looking at a move to $80, maybe grab something like this $55 strike. I know it's showing at $219 right now. By tomorrow morning, it's probably going to cost about $250. So you'd get two, right? And you'd be able to get two of those. And if it gets to $60 early, you make about $2,000. If it gets to $80 at expiration, it'll pay you about $4K or more. If you're in this for the potential of a huge GME January type move, and you're thinking this thing's going to run all the way into the hundreds, I just take the highest thing on the chain. So this would be like the $73 strike. You know, cost you, it says 114 right now, but I'd imagine tomorrow it's going to open up at least $125 each. And just as a reference point, and the reason I would do that is because you're looking at blown way past that thing. So, you know, if it gets to 100 and you got that $73 strike, you're probably going to get paid about 4K. If it gets to 200, you're probably going to get paid somewhere around 14K. 325K. Now, obviously, keep in mind the float on AMC is 6 times higher than GME, and that's a shit ton of volume needed to get there once we get into those, because you would probably need somewhere around 6 times the amount of volume, I'd imagine. But if you believe it's possible, the payout's huge considering it's a $125 bet. So, you know, more power to you. I might, now that I'm sitting here talking about it, I might just grab one of those just to make sure that I'm in case it happens. Of all these plays, I think, like I said from the beginning, GameStop's kind of been my play since before January, and something that I've been riding with, and I haven't played any of these memes. I may end up grabbing some of those Blackberry $20 strikes for next week just so that I have a little skin in the game. And I might grab one of these $73 AMCs just to grab one for next week's expiration just in case. I think anything's possible. I do think that we're in the early stages of this, and the only reason that I say that is even though AMC looks like maybe it's finished, if you look at the volume, we're not anywhere near the volume that we saw in January. I mean, in January, like I said, Nokia was up to 1 billion. You know, GameStop hasn't even reached anywhere near the volume that it was hitting in January, and same thing goes for Blackberry. So I think there's still more room to run. Be safe. Only play with what you can afford to lose. Obviously, options are risky, but I also think that if you're going to throw a little bit of money in, you might as well do it with options because it gives you the more bang for your buck, and it'll prevent you from being a bag holder, right? No one wants to be the person that jumps in and buys, you know, Nokia at $9, and now you're holding on 1,000 shares that you just spent 9 grand on. No, I'd rather pay 500 and get my 45 contracts, you know, or, you know, no one wants to be the person that grabs the AMC at 35 and then tomorrow it crashes. But if you know, want to throw out $125 and then if this thing runs, you got skin in the game, to me, this is the way to do it. Hope you enjoyed the video. I know there's other memes that have kind of been popping up and have kind of been tracking along with these. I wanted to get this video out today. Or maybe if I got some time tomorrow, I'll start looking at some of the other ones and different option plays that I think might work. If you guys enjoyed the video, leave a comment, maybe even leave which other stock you want me to do the next one on. Take it easy. Have a good night. Good luck in the market tomorrow.